Greetings, traders, and thank you for joining with us today. Here it is on Big Monday at April 6th, and hope you had a nice weekend and ready for action today. We're going to get started pretty soon, but before we do, let's read the risk disclosure statement, which I've posted here on the screen, and understand that futures trading is risky and only risk capital should be deployed. And risk capital is defined as money that can be lost without jeopardizing one's financial security or lifestyle, and that only risk capital should be used for trading, and only those with sufficient risk capital should consider trading the futures markets. Well, I hope you had a nice weekend, and we've got a big update cooking here, which is great. Always nice to see that. And let's start taking a look at what's going on here. First of all, we're up into the orange zone again, which is good, and you'd think with a $1,000 up day on the Dow so far, that's what we're getting up here. You can see on the Dow Jones Industrial Average up $1,025 here. That's a good deal, and they're trying to push them a little bit harder. So overall too, you've got a very bullish advanced decline line shown right here. However, the trend is very high, up over 1.30. So this may later affect the markets. What I'm getting so far for today, I think we should be scalping for an average of about 5 to 8 points. We're slowly getting back to normal. With this big move you see here, the volume meter shows trading 1,100 contracts, which is decent. That's normal for an opening usually. And then they drop back around the 7 to 800 average level. This is a 4-period average of the NASDAQ volume. These are the individual candles here. And you can see it's not all that high. What that means is maybe now we're hopefully getting pretty close to getting back to normal in the markets. I'm not sure that this up move here will get sustained, but we'll sure watch for that and hope for the best. I want it to come back, obviously, all of us do. So that's a good deal. What I'm going to watch for here is for a short scalp coming up here in the market pretty soon. Now, we got to be careful because they may try to jam this thing a little harder, but just stay ready. We're going to try to work a short here anytime. We're going to work a short on the market. So stay ready. And let's go ahead and test them out here and go short right here at the market. 54 quarter, 54 even, 55, 57. They're jamming them a little bit here. So we're short right around an average price of 54. Now let's stay ready to jump out here because they may try to goose them a little bit on us. And we're using a 20-point stop. So 54, 64, that'd be all the way up at 74. And obviously I'll try to get out ideally before it gets too serious against us here. Let's see if we can take them down. Let's see if we can start taking that 54 level down here. Smoke it down. 54 running ideally. I'm targeting 47 here. Let's see if we can break 54 down, get 50 going, and then look for a target move down to 47 on this deal here. Breaking 50 down, trying to smack them down to 47. Let's see if we can get them to smack them down to 47 for a quick scalp here on the sell side. So far, so good. 54 moving lower, looking to break them down to 47. There it is. Boom. There it is. So we're out at 47 there on that move. So again, we got short at 54. Right when I called it out, I said go short at the market. I was speaking that. I click when I speak it to get a time in sales. And it popped right from there, and it went all the way up to 59 area, and our average price was 54 on the pop, and you can see that there. And I said to get out at 47, and I just show, after I don't pay attention that much to the exit. I give you the exit call and watch the prices dip through that. And I have a limit set, but I don't often hit my exit button because I'm meticulously watching the 47 to come in, and as soon as that does, so this is not a real reflection, but 47 was a limit I wanted to place there. So our trade, according to the exact signals I gave here in the room, It's 54. If you hesitated, you might have got a higher move up earlier. And then we covered them up at 47. Because again, I'm trying to work a tighter scalp today just to start. Now, it may not, they may sell them off stronger, which they are. We don't care once we get out. I don't really care I don't care if they go down to 30. It really doesn't matter. But we got a 4, 5, plus 7 points on that deal. Now, our goal every day, as you know, is 8 to 12 points. And based on 4 contracts, because we do have fairly normalized volume today, so we should be able to go back to the regular members should consider going back to maybe the 4 contracts. You might want to wait till trade a couple of trades from now, 1 or 2 if we do that, and that way you'll have more of an indication. But this kind of volume is not really, you can see they're not traded at hyper speed to where it's like it was over March. Remember that? See, all of a sudden when you're in the middle of it, it's like, oh my God, oh, and then after things calm down, you look back and you go, wow, what was happening? They were moving in 30 to 50 point moves, like you get in a trade, boom, it'd go 30 points like nothing, and then 50, and we caught a lot of those. But something to remember, it's always good to remember this stuff. So that was a good deal there. And again, just was looking for, I was going to say 45 to 47, but I really wanted the easy money in that because I don't know. And another thing is too, is because it's so bullish here, whenever you get a market that is this strong on the advanced decline line early in the session, later in the session it can change a little bit, but early in the session you got to be willing to scalp the short side and not way too much, because sometimes on a deal like this they'll go 3 points in your favor, 3 or 4, and then stop and rocket ship back up to the high area again because of this powerful advanced decline line. So that was our first trade for the day. Just as a recap, we are moving up in the orange zone here now. That's above this thick orange line. And the orange zone, it's wide, obviously they all are, because this was the first hard smash in the markets after they started topping off in mid-February, when I called for you to sell 3/4 of your stock portfolio. I hope you did that. I couldn't have gotten rid of enough stuff. We all look back and think, why didn't we sell the whole dang thing up there and just buy all that stuff back way down here? Well, we'd like to think that, but we may not necessarily do that. And one may ask, why is the market up? Well, I think my last post you saw, and I got a lot of comments from ER people and stuff working in the ER places around the country, and they're saying it's dead here at the hospital. I don't know why all the hype on TV. So it was a good post. It went viral. Others started reporting. I personally drove to 2 hospitals over the weekend when I was going to do some errands. There's 2 big ones within a 10-mile radius where I live, both empty. So again, I'm still getting comments from that post, and the ER people working in the emergency rooms are saying people are getting sent home left and right. New articles coming nationwide. This happened. People are getting sent home. Where's the fire? And these damn news media, fake news, hyping this thing, and you got to wonder, it's these same impeachment hyping people, impeach the president and Mueller report and all this crap. It's these same people. Why are they hyping the pandemic? You see, are they part of the problem? Are they part of the group that put it out? Well, I say definitively yes. You'd have to have studied it as long as I know to know that's true. Same group, destroy Trump, destroy America, ruin everything, go communist. Yeah, go communist, forget America. Hate white people and go America. Or destroy America, that's the answer. I'll tell you, they need a straitjacket is what they need. Not just a normal psychiatric visit to the hospital, but an actual straitjacket. Unless, they want to live in a Venezuela type environment, you can always go there now. Love to see you move out of here. Get the hell out of here. Here's the bottom of the orange zone. That was the top way up there. So if this market is going to climb back to any semblance of where we were, which everybody thinks when there's a freak out like we had, is like, when are we going to get back to where we were? Well, we're not for a long time, but here's the orange zone. This gives you a good measure. I don't know if any other trading room in the industry has what I've done here. We have the gray zone way below this and the orange zone here. We've been tracking these since all of March and since they first occurred. So here's the orange zone. If we want to, quote, get back to where we were, we're going to have to get up into the center of the orange zone here. Now, this is not maybe the exact center, but this was a key level approximately. Let's see how it looks as far as the center. Yeah, it's about the center where I marked originally. Then I had these little supplementary lines near that. So if we're going to get back anywhere near to, quote, where we were, we got to erase this entire drop, which was from the very first crunch in the market. Remember the first couple days after they start selling off the Dow's down $1,000 2 days in a row. And that's when we formed this orange zone. I put the center line in here. And then above this, we have a really key blue line up here. That's very important, level 2. And what's going on here? Anyway, so for right now, if we can get up to this 79.52 level, that would be absolutely fantastic. I'm not sure if that's going to happen today or not. I'm not forecasting that it will. I'm just trying to determine or give you, determine where we might go and to show you these key levels. If we can hold the orange zone, we got right below the orange zone, we have today's opening range shown right here. Always a key daily vital bias reading measurement. If prices pull back into the opening range, then we watch for move down to the center. It becomes an if type thing. Okay, we're in the opening range. Can and will they move down to the center? If they move to the center, and if they hold it, then they'll probably bounce back to the top of the opening range again and try to keep running it up. That type of thing. If they break the center, the next level would be down to the bottom. If they lose the bottom, then we're back to the old selling routine, which I don't think is necessarily over yet, but it's lovely to see such a nice day here. Just watching the action. We caught that move up here. They blasted them from 54. We got the 47s here. Just happy as can be to get that nice 47 move there, not get stopped out. Sure, they went a little lower. And remember, I said I don't care if they go down to 30. Well, they did. Who cares? I wanted 54 to 47, and that's what we got. And that was a nice paycheck for us. So now the key is to watch. Is this a shock drop that's going to create more dropping, or are we going to see them try to jam back higher? And if they do, should we short it again, or are they going to really try to take off here? Well, the advanced decline line suggests that they will, because it's very powerful here. Let's take a quick look while we're watching to see how they react to key level here right now, 78.48. 78.48. Let's take a look at the gold. 1690. Look at that gold. We're long from gold in the room, called out for years. We were long originally at 1,000. It's around 1,040, somewhere around there. We sold it 3/4 of it at 1350 a couple years later, I forget, in the room. And I said, hang on to 1/4 of it because we're going to reposition. We repositioned when the gold dropped back down to 1150 area. I don't remember the exact figures. I've got them written down somewhere. And so we bought the whole, filled out the gold position around 1150, averaging our position down to around 1120. So you can see we're real happy when we see gold go up. That was my forecast for gold to possibly reach up to 1600 and then move up to 1800 on this initial phase. So some of the panic now is being taken out of this virus as people see that the news is hyping it. And you got to question, what are they hyping it for? Well, big keyword now, they're attempting something they've been trying for decades to do, which is to try to vaccinate everyone and put a monitor in the vaccine where they can track everybody like a little cell phone chip or something. They've been trying to do this for a long, long time. So now they smell an opportunity, and there's some talk of if you don't get vaccinated, get your certificate, then you won't be able to travel and all more fear crap. I'm not trying to push that. I'm just saying these globalist criminals, they're literally, it's like a worldwide criminal mafia. They just won't stop with their agenda to kill off the population and vaccinate them and just, continue the slavery. You just saw a massive version of the slavery, the way their owned and controlled media just terrorized everybody, got everybody shut down. And but as I've mentioned before, it has a very good purpose to it as well. So keep in mind with what I've told you in the past why it's got a very good side purpose, and that is for our military to go in and clean up the garbage here in America. So we're looking forward to that. That's progressing very nicely, and you'll see more of that in the coming weeks. Well, the heat map, we got the Dow up 5%, NAS a little bit trailing and a little bit stronger in the transportation index. But look at this. Across the board, the sectors are just smoking higher. Look at that, man. What is it? Now, naturally, these are the energies up the least, which kind of makes sense. Poor energy, poor oil there. XLP, consumer staples, a little weaker because that's like a run to safety type of sector. And then you have the utility sector is strong too. I think a lot of money coming back into the utility sector, which is good. It's like, whew, we need it, we need it. Boy, do we need it. This SRET, which is a income instrument for based a lot on utilities, you can see is roaring back nicely for us, and that's good. We mentioned that in the room. It got slaughtered along with everything else, but it's discounted here now, so whatever. Let's see here. Most recent stock recommendation I've had is DocuSign, DOCU at 71 bucks. Doing very nicely. It was up to 90 at one point a couple days ago. And Uber, good old Uber. A lot of promise in that company. Long at 22 bucks, up a little bit. So we're just watching to see what's going to happen overall now with the markets. See what kind of action we can get going. I've got the crude oils chart scrunched up a bit here because we primarily trade NASDAQ, but for many, many years we were trading crude oil with Boomerang. Now here's a winning trade here just to show you what it looks like. The dynamic trend bands here cross over or cross under in the case of a sell channel, which was opened up right here. And once these cross, we just trade a pullback to the signal line. The problem has been it's starting to normalize a little bit. It's obviously we know what happened to crude oil. It just got horrendously squashed down towards 20 bucks. I think even dipped into the 19s for a minute, and that panic launched the thing higher. But currently in this environment, well, look at it starting to come back here nicely. Here's another winning trade set up here, new buy channel, all green candles. The dynamic trend bands here match color, pull back to the signal line, up they go. Hey, who knows? Here's the dynamic trend bands matching color, pull back to this yellow dot, down they go. Sell trade here. Wow, who knows? I think they're going to come back. It's just a matter of things normalizing at their current levels. But we will keep this crunched up here a little bit until we see crude oil normalize, and I'll start giving you the boomerang signals again, and I'll teach you how to trade crude oil right off our charts here in the room. It's a bonus feature. All right, so they're goosing them up here again. It looks a little bit like the riggers coming back in here trying to prop it up. Just strikes me that way because notice how it's coming down. It's very choppy and continuing lower. Then all of a sudden, wham, wham, wham. There looks like somebody's trying to help this thing out here. But nonetheless, very bullish advanced decline line. So let's see here what we got. Yeah, it looks a little bit artificially contrived here. Anyway, we got our quick 7 point. Just by the way, going based on our normal 4 contract type trade, 7 times 20 bucks is 140 bucks minus 5 bucks for commission. 135 times 4. If you traded 4 contracts on that, you got a $540 paycheck. So something to consider. You might want to stop trading for the day. We usually trade for 8 to 12 points. So I'll do another trade or two today. But just keep that in mind. That's a nice $540 paycheck within the first 10 minutes of the room being open. So something to consider. See, look at how they're hitting them here all of a sudden. That's why I was watching it, but not a sell signal or anything yet. Still watching to see if they can kind of work their way higher. Yeah, but keep that in mind. My other charts are showing support is holding so far, which is right around currently around 77, 78 on a bigger picture scale. That's using Fibonacci and Gann numbers. And the potential to stretch them is substantially higher there, but we won't worry about that. I would say, well, let's see, 79.37 on a bigger picture scale, but again, we won't worry about that for now. There'll be other resistance spots along the way that'll come out. Right now, I'm wanting to see if this is going to start to fizzle out a little, maybe, because of what the condition, regardless of whether it's, overhyped or whatever, still the news media influences a lot of people's minds. All you got to do is go into the store and you see everybody just like good little slaves doing exactly what they're told and, standing 10 feet apart. It's the most ridiculous thing I've ever seen. The virus doesn't float through the air, and people under 35 that are healthy, even 40, the chance of getting this is so rare, it's unbelievable. But they're pushing it, and everybody just, controlled by fear is what it's called, really. It just comes down to that. Controlled by fear. So, whatever. But again, I'm getting flooded with reports from the hospitals from my last post showing all these empty hospitals in New York and Boston, major cities, Los Angeles. And like I said, it really got a huge response. And getting a lot of emails and comments from the people working in the emergency department saying, yeah, everybody's going home. They're sending people home. And some other articles came out about that today, but I don't want to. It's kind of starting to run on automatic. Pretty soon the whole thing I think will fizzle out, and that's when we'll have to be careful for the riggers or the worldwide criminal mafia that has been controlling America for a long time, but especially since going back to the Kennedy era when they assassinated John F. Kennedy. That's when they really took power. It's not a Democrat or Republican thing. That's part of the brainwashed Democrat, Republican. Yeah, they have different principles and all that, and we respect more conservative type views that believe in America and all that, but I'm saying the people that operate in those realms, they don't care about party. They just, however they can manipulate people, that's the party they want to use. And right now that's the Communist Party. You can see they're just turning it in. What used to be the Democrat Party prior to them killing Kennedy, they've converted it to the Communist Party now. They're trying to push very strange people to run for so-called Democrat thing, and they're trying to push mail-in voting so they can cheat and all kinds of weird stuff going on. We'll see what happens with all that. Um, be pretty entertaining, that's for sure. They are still popping them up here. I was looking for another short because they, when they get this high and they're popping them up and I see signs of exhaustion like that first trade, you can see they pan out fairly quickly, and that's what I like. But, going long and all that's fine too, but we just, okay, watch out here. Let's see if we can get some kind of, okay, stay ready here. We're going to attempt another short anytime. I think I just missed it. See if they roll them back a little bit here. See if they roll them back. If we can get them to pop back up over like 61, 62, I may go short, but I think we missed the short. Happened really quickly. Let's see if we can get them to pop back towards 62, but I think I missed the short. Usually I get in before it happens. And still a chance we could get them back up there. But I don't usually like doing those type of trades in an environment like this. Yeah, unfortunately we missed that short. It happened really quick. I still think there's a chance here. They're not popping back that strongly though, so well, let's give it a chance here. I'm still watching, but they may start to sell off a little bit more. Yeah, I see pullbacks into the bias, like this little sell-off to sell a pullback here becomes riskier because the overall underlying is pretty strong, and we still got, it's still early in the day, we got this hugely powerful advanced decline line. So trying to like trade a pullback into a sell bias is the right idea, but not always. Like when you have something this strong, you might do that, and then it just becomes an uncomfortable
Connection
trade. So I'm
lost.
trying to avoid an uncomfortable trade, obviously. Let's see if what we can do is measure it. If it does jump back up here, we can measure it, but probably we should be looking more for a buy trade. See, I don't really care. I just want to get a trade that can work out for us with as little grind as possible. So they are pulling them back here. It strikes me that it could continue, but let's look for a buy here. Let's try to find a buy trade, okay? Stay ready here, and let's go ahead and go long
Order
right here at the
filled.
market. Long at the market. I think I got them right around 48, 48.50. So we're going to look for a move, a pop up here. Stay ready to jump out anytime here. We're long right around 48.50. I'm looking for a move up to 53 or higher here. 53 or higher. Just a quick trade, 53 or higher. There it is. Boom, 53. So we got out there.
Order filled.
53. That's all I wanted, and I'll tell you why in a second here. So 48.50, yeah, and out at 53, 48.50. Now again, as I mentioned on that first trade, I'll show you the time and sales, but I'm always a little late to click. I do have limits in there and everything, but I'm not managing the trade as fast as you can do. When I say 53 and you click and your brackets come on, you got the 20-point stop bracket and whatever you have your um, exit bracket at, you should probably make them both 20 and 20, or maybe we're going to start tightening those up pretty soon. But then you grab that and pull it down to 53, or you just hit when you exit. But that's normally what you would do, is grab your bracket and pull it down to 53. So I just clicked after the fact, because I'm monitoring the trade and I'm not, you know, trying to push on my buttons. I got a limit there, but I wanted to get out, and you can see why I wanted to get out at 53. The high of that move went up to 58, and that's normal. But here's our time and sales. You can see the entry at 40 48.50, which is what I quoted, and out at 53. And then when it finally hit us, I'm looking at a whole different screen. My button's in the other one. I'm going, okay, 53, get out, get out, because that was the limit. There's actually a limit there. So mine shows a little less, but so 48.50, 53, and I'll tell you why in a second why I did that. Which, well, you can see on the chart why I did that. Yikes! I knew that something was wrong with that deal as far as popping them up there. Okay, so 48.50, 49 to 53 is 4 points, so plus 450, because we have a daily limit or a goal that we're trying to achieve, which is 8 to 12 points. I'm explaining to you now why we did that. Our goal is 8 to 12 points. Well, we had 7 points, which is great, very close to 8. And in fact, if it was any more of a scratchier type grindy day today, I would have stopped us from trading 10, 15 minutes after they opened the room with 7 points, because that's a $540 paycheck on 4 contracts, which is what we encourage you to work your way up to, practicing in our room, following my exact training methods. Takes a couple weeks of practice and training. Some can do it quicker, but that's what we recommend when you join the room. But because we had already had close to 8 points on the next trade, which I suspected anyway was not going to pop that much and could have been a little bit of a tricky on the buy side, that's why I didn't hold. Because some people say, oh, you should have held because it could have gone way up again. Well, I'm not, that's a little behind the curve. I'm ahead of the curve, and I knew that a pop could possibly flop back very quickly, which you see here it did. Sure, it went to 58. I was targeting 53 because when that 48.50 we got filled there, I just wanted to get out of that thing with our normal 4 to 8 point type scalp. 4 to 6 really. I wanted a lot tighter one. So all I wanted to do is add that additional 4.5 points, because that means 4.50 points times 20. All I'm thinking about is our paycheck. Let me do this again. 4.50 times $20 a point on NASDAQ is 90 bucks, minus 450 is what we use for the commission measurement. We'll just say 5. Well, actually, on 2 contracts it's 9, so we'll just say 4. $90 minus 4 86 bucks times 4 is 344 on 4 contracts. You see how that works? Now, if I add our first trade of 540 plus 344, you can see now we got a whopper. Got plus 884 on 4 contracts. So this is my promise to members of the room, and this is my promise of what we do in our trading room every day. We are not playing games here. We're not going to sit here all day in the room and with our tongue hanging out like hungry coyotes, which is an example I always live because I live in a wooded area. I see them sometimes, tongue hanging out, running down the street looking for a cat, a dog, a coyote, or a raccoon, anything they can hunt and eat. And you know, we're not like that. I mean, we're not beginners. We're not amateurs. We trade. Use them. We use them. We have a saying. We use the market to carve out a paycheck for ourselves. We don't let the market use us by driving us nuts with would've, coulda, should've, caught the bigger move. Oh, you left so much on the table. See, that's called the market driving you nuts. And many people come to our room and they confess this to me on the emails and stuff. They've lost three, four accounts, five, $10,000 accounts. They've blown out the door because they're trading without a proven method. So they come here to get relief from that, and I show them and explain here in the room all the time, and we're doing it now. If you go in with a very specific amount that you know you can achieve, and you totally concentrate on achieving that amount, and then the big key of all, which the amateurs don't seem to understand, stop trading. Stop freaking trading. That's why you blew out those other accounts, because you kept trading and trading, over trading, hyped, all hyped with unproven methods, over trading. Gee, what could go wrong with that? So we do the opposite. And I've talked about this in the room before. Some of these methods I've learned from floor traders that I used to meet when I'd go down to the New York Stock Exchange. It was called the Knife back then. It's since been closed. They had a smaller version of what came out in the electronic market, the S&P 500 contract. And when that was traded on the floor, people wanted a smaller version, so they made the New York Futures Exchange contract, um, which is a smaller version of the S&P. And so I would go down there occasionally and visit them. And floor traders used to laugh when I asked them about catching the big move. They go, and they all laughed. I was out to lunch with three of them, and they said, nobody does that. And I went, what? See, that's the illusion of the markets. Everybody, probably you might even be guilty of this yourself, looks at this market and go, man, if I just bought them here and rode them up to here, I could have had a huge day. But the floor traders are laughing. They go, nobody catches these big moves. Only the liars. And then they laughed again. Only the liars catch them. So, that's coming from the people who really knew the markets and were part of generational families of traders. Anyway, I won't extend that discussion too much further, but I just want you to know we're pretty much like the Traders Anonymous, the 12-step program for people who get addicted to booze and stuff. No sitting in the room all day, creating a much better lifestyle, much easier on the nerves, especially as you get over and you've been doing it a long time. You find that um, trading can be it will eventually take out all the players, even the pros. How many hedge funds have just caved in and the poor guys, who knows where they are now? It's very hard to recover from a devastating blow. Well, we don't do that. We just come in here, make our paycheck, and go home. And after you've had a string of paychecks with us, you join our room. We're the lowest cost in the room, so there's no stress there either. Not just in the way we trade and what we do, but the cost. After you've had a few weeks, few months, strings of paychecks, you start going, yeah, wow, I could get used to this. I like this lifestyle. So, for those new to the room as well, keep in mind you've been with us 2, 3 days now, and you've seen what we've accomplished. We've had tremendous, tremendous results. We've had, I've been giving you volunteer trades and all kinds of stuff. We got, just for this month, we had 12 points gain on day number one on one trade. We had 20 points gain on, that was April the 1st, was a Wednesday. On Thursday, April the 2nd, we had a 10-point trade off, like similar like today, off the opening, and then another 10-point volunteer trade. 20 points that day, huge day. Today we've had plus 1150, which again on four contracts produced an $884 paycheck after commission. And Friday we had a small loss. It just was a very strange day. Well, we had a 7-point volunteer trade, so we netted up 3 points with the volunteer trade. Just a very odd day, I remember, but we had two loss trades and two 9-point gain trades, and then we 7. So overall, we had a slight gain on the day. And then today, the 11.5 points. So you see, you start getting real used to that. But if you're still stuck in the big bucks idea and all that, I want to give you a friendly warning. You know, it's your friend here talking. You're going to lose all your money. Got to get the big bucks idea out of your head and just steadily improve your talent in trading with a proven method, or just follow me here in the room. And what you'll find is that over time, you'll get real good at what you do. Then you can increase your size by 1 or 2 lots. And then stick with that. That's what we recommend in the room. Come in and join us. Just watch for the first couple days after you join. Then after those couple days, and write down all the trades. This is your urgent training assignment. Write down all the trades. You'd have what I just told you there for this month. You'd say, wow, this really works. Then spend the next week training yourself on the simulator to catch my trades at the speed I do and get very close to the entries. Now that the market's not as crazy and slowing down a little bit, we're finding the entries are going to be very similar to how they've always virtually been since I started the room long ago, where I can call out 2, 3, 4 ticks and we'll be right in that range. So that's good. It was just a blink of an eye ago, I'd say, like right here, if I say go long at 68 even, it'd be 68, 69, 50, 67. I mean, it was flying all over. So, you know, the wider stop. And I'm not ready to go back to the 12-point stop yet, but we may do that pretty soon here. Need a few more days to see how the mop flops here. So that gives you an idea of how our room works. We've been open. The room opens at 10 o'clock every day. It is now 10:41. So we've been open 40 minutes and we've achieved our goal. And I've been talking and sharing a bunch of things with you. So net time trading has been, I can tell you from the time in sales, the first trade took 1 minute and 10 seconds, and the second trade took 25 seconds. I'm serious. Look, first trade took 7:02:30. My time is on the West Coast here, 7:02. 2 minutes after they opened the room, 7:02, 30 minutes, 3:40. 1 minute and 10 seconds. And the second trade took going long at 29:05 and getting out at 29:32. So whatever that is, it's 24 minutes or something, 25 or 25 seconds. This is the kind of stuff I like. See, you get a paycheck, and the only time actually spent trading has been 3 minutes. It's kind of funny, really, if you think about it. But that's futures trading, and you know, you can learn this. You can easily learn if you're new to the room. You know, it's easy to do this. You just follow what I do. You just have to learn how to do it. Just follow the steps to practice, and you'll be rewarded with these huge paychecks that we pretty much, that's all we focus on every day. Like I said, 3 points Friday, so on 5 trades, so there's a lot of commission there, but 3, I didn't total that one out. 3 times 20 minus It was about break even, minus around $23 commission, $37 if you had 4 contracts, $148, and then um, next day on was huge after with the volunteer trade. Let's see, it's on 4 contracts it was $795 on the one trade right off the opening. Like today we had that one right off the opening, and then 20 to 10 points on the second volunteer trade. If you took that, 795 times 2 would have been a 16, just under $1,600. Day before that, the paycheck was 940 based on 4 contracts, and then we're going into March and all that. Just had a, although it was the most volatile month in history, certainly most I've ever seen too, but I know for a fact because I've been trading 33 years, so I know it was the most volatile month in history. We had the biggest month ever, and a lot of that was because of the huge volatility in the swings and everything. Anyway, so I wanted to point that out, and really wanted to thank you for joining with us today, and uh, appreciate you very much if you can join my channel here and be a regular member, watch the videos, come in and join our trading room and start making these kind of paychecks for yourself.